Hey everyone, welcome back to the channel. In this video today, I'm going to be talking about 3 stocks that can double your investment with options. Now I know right now there is a lot of volatility in the market with the federal government rolling out its plan to pay down all the money they printed since 2020, but the option strategies I use actually reduce your risk. It is actually the option strategy Warren Buffett prefers. And lastly, what you know is I'm more biased towards value stock over growth stock companies, given how shaky things are in the market. These options are great for smaller portfolios and allows you to collect income, profit on the upside and downside, and potentially own stocks at a great price. If you want to learn more about trading options to reduce your risk investing or just know how to build more wealth, make sure you subscribe to the channel. And if you like this kind of content, all I ask for you is to hit that like button or comment below so we can share this video with more people. Okay, so without further ado, the first stock ticker is METC, Ramaco Resources Inc. Okay, so Ramaco is a coal company that produces coal to both domestic and international customers. And yes, I know coal is not something pretty to be investing, but guys, right now there is such a shortage of commodities and basic supplies that coal is going to be something really, really important to keep a lot of things going. Guys, right now it is trading around the Bollinger Band, so around the moving average. So it's a fair price to get in on. But if you take a look at the PE ratio, it is trading at a pretty relatively low PE ratio for a company like this, 17.67. So it has a market cap of $703 million. So this is a fairly sized company. Let's take a look at some of the options in our Robinhood. So right now, if we sell a put option out a month, we can collect about $133 off a collateral of $1,370. So that's 10% return in a month. That is great premium. The stock would basically have to fall about 5.5%, 5.66%, for us to possibly get signed at $15. So we will get 100 shares of METC at $15, which is a great price. But we will also collect the premium. So before we actually start to see some kind of losses, if we account for a premium we collected, it would have to really fall down to $13.70. And regardless, guys, if we get assigned, this is also a great company to sell covered calls. So let's say we do get assigned, or if you have 100 shares of METC, you can simply turn around and sell covered calls. Right now, if we sell to about $20 a month out, so basically if the stock goes up to $20, we would be forced to sell, but we will also collect $70. Okay, so that is a great stock to sell covered calls on. If you want to collect more premium up front and basically allow yourself more room in case the stock goes down, you can sell all the way to September 16th. And then now you would collect about $310 for every contract that you sell, and with a strike price of $15. So that means if the stock goes down to $15, you would still get assigned at $15, but you collect more premium because you sold the contract out to September 16th, which is a couple more months out. Okay, so it does have a lot more time, but your premium essentially doubles and then some. Okay, so this is slightly this is an option that's good for if you really don't want to get assigned. But guys, I would just go ahead and just let it get assigned a month out. If so, I would turn around and sell covered calls. So I think this stock is great for doing the wheel. But again, if you want to sell put options out further out because you don't want to get assigned, this would be a great option as well. The next stock ticker is HIMS. So Hims & Hers is an American telehealth company that sells prescription and over-the-counter drugs online. They also sell personal care products. The company's revenue has grown compounded annual growth rate by 117% over the last 4 years. The company has zero debt and $250 million in cash. This is a phenomenal company, guys. It's dropped from $25.40 to about $5 right now, a little less than $5. Okay, so right now Hims is trading at $4.78. If you take a look at the 1-year chart, it's really gone down from the high of $25 something to right now, just it kept going down and down and down. Even taking a closer look at where it's at right now, it's trading below the moving average. in the Bollinger Band. So let's take a look at what premiums we can collect selling put options. So let's go to our Robinhood account. We're going to sell a month out. We're going to change the puts. And so as you can see right now, if we sell a put out into May 2022, right now you can collect about $68 off of about $435. So if the stock basically hovers around $5, you may or may not get assigned depending on the option buyer, but you essentially collect $65 off $435. So you're collecting great premiums a month out. If you go a little further out, let's go into August, so another couple months, you would collect about $100. Okay, so I would probably just sell the put option a month out. Either that, or you can also take a look at November 18th. You would collect a little more money. But honestly, guys, right now, again, HIMS is a great stock to, I think, would do the wheel strategy. So you would essentially sell puts, and if you get assigned, you would simply turn around and sell covered calls. Okay, so if you have 100 shares, or if you want to buy 100 shares, right now you can also sell covered calls, and you can collect premium on the upside. Let's say if we sell covered call out to August, if the stock goes up to $7.50, we'd be forced to sell our stock after it increases by $2.50, which is a big upside. But we also collect $28 in premium. So this really gives us two upsides, one on the premium and one on the stock price going up. Okay, the last stock ticker is NIO. NIO is an amazing company under solid management and great growth. They manufacture EV vehicles just like Tesla, and though they're behind Tesla, in Q1 of 2022, they delivered almost 26,000 cars. NIO is already getting up a second manufacturing plant, so production may easily double in 2022. NIO posted a compounded annual growth rate of 99% in the last 3 years. And although NIO is spending a lot of money on research and development, with their production ramping up, I'm actually expecting NIO to be profitable by 2024. One of the challenges NIO has is how costly putting up a charging station in China really is. The cost of just one battery charging station is about $500,000. But what's unique to NIO is their battery swap service. In March 2022 alone, NIO serviced over 7.2 million battery swap service for their customers. NIO has a lot of volatility. Okay, so it went up in October, it's gone down ever since then, and last year, again, lots of volatility, goes up, goes down, but overall the trend has been going downwards. I think a lot of it is due to supply chain issues, but right now it is trading at its all-time low, okay, ever since last year in 2020, below $20. Right now it's about $20, so guys, I think NIO is a great stock to get into right now. Especially if you're using options. Let's take a look at what options we can do with NIO. So if we sell, let's say about a month out, right now we can collect about $121. I would even consider selling options at $19, where you can collect a little more premium. And so you essentially collect $157 off collateral of $1,743. That's about 9%. Return in a month. So that's very, very good. If you are more concerned that NIO is volatile and you want to allow yourself more downside in case the stock goes down, then you can sell the put option out to May 27th. So 2 months out will give you a little more premium. You can sell it with a strike price of $18. And so if the stock goes down to $18, you'll get assigned, but you would also collect a pretty good premium. Let's take a look at if you go further out. So let's do September 16th. You essentially double your premium. If you go out to, let's say November 18th, then you would be collecting about $300 with a lower strike price of $17.50. So you would collect $320 off of collateral of $1,430. So that is basically a 20% return in less than a year. So guys, this is another great strategy in stock to sell put options on, and you can definitely wheel it. So if you get assigned, you can turn around and simply sell covered calls. where you own 100 shares and the stock goes up, you would be forced to sell. Guys, on the upside, this NIO has a lot of great potential. Let's say you sell upside to $21. So if NIO goes back up to $21, you'll be forced to sell your shares, but you would collect about $200. Okay, so that is a very, very good premium to collect for the upside. Okay, so NIO is a great strategy, a great company to sell puts and sell covered calls, essentially doing the wheel option. Okay, so that's NIO.